Another question, we will try this. Can you go to this question, please? A company has the following laws in place at the beginning and end of 2016. 10% bank loan repayable 120 million, 31 December 120 million. 9.5% bank loan repayable 80 million and 80 million. 1 January 2016, a company began construction of a qualifying asset, a piece of machinery for a hydroelectric plant. Like if you happen to go towards Bakra, you probably see that red color and white color. Yes. We call it Puttu Bambu in Sri Lankan point of world. So this is a plant. This plant is a huge investment. Very big investment. $100 million, $500 million, $1,000 million, like this. So that similar thing only they are saying. On 1 January 2016, a company began construction of a qualifying asset, a piece of machinery for a hydroelectric plant using existing borrowings. Expenditure drawn down for the construction was 30 million on 1 January, 20 million on 1 October. Calculate the borrowing cost that can be capitalized for the hydroelectric plant. Can you try, please? If you remember, I talked about to calculate weighted average first. You have to first calculate the weighted average. Now, there are two different borrowing I have. One is,
and he has specific project, right?
no. See, that is one general project. We are using two different funds. If they say like this 120 million only used for hydroelectric plant, then that is the specific project. The way it reads here, on 1 January, a company began construction of a qualifying asset, piece of machinery for a hydroelectric plant using existing borrowings. They don't say no from 120 or from 80 or from 10% or from 9.5%. So this is general borrowing. Then what we need to do? We need to calculate the weighted average borrowing cost rate. You all have the idea, or you all need to work it out? Others? Okay. First step. Now I have 120 million. Correct? What is the interest rate?
10%.
10%. Plus 80 million. What is the interest rate?
9.5.
9.5%. Correct? Then divide by 120 plus 80 into 100 will give you the borrowing weighted average borrowing cost. Can you calculate please? $120 into 10%. Okay?
80 into 9.5%. So 7.6.
See, 120 into, please follow me, 120 into 10% divide by 120 plus 8 plus 80 into 9.5% divided by 120 plus 8. This will give you the answer, not the previous method. Now can you try how what is the percentage is coming?
9.8.
Correct. That is the first step. You
9.8 into 101.
9.8 is the weighted average borrowing cost. Now the next situation is what they say. They borrow 30 million on 1 January and 20 million on 1 October. So 30 million borrowing 1 January for how many months?
1st January 2016.
So accounting year end is, when is the year end?
December.
31st December is the year end, no?
Yeah. Yes.
So
12.
when you borrow for 1 January, that means how many months it is with them? 12 months. So 30 million into 9.8% into 12 over 12.
12. So 12.
Correct, no?
Yes.
On the other hand, the second borrowing is how much? 20 million. The 20 million is when they borrowed. Borrowing is taking place on 1 October. October, November, December.
3 months.
How many months? 3 months. So 3 over 12 into 9 point.
8%.
What is the borrowing cost?
Yes.
Display with the maybe?
Another one?
Yeah.
80 months.
So 20 million into 9.8% into 3 over 12.
October.
November,
3 months.
So 3 over into 3 over 12.
Mm. 20 into 9.8.
8%
8%.
into
Okay.
12, sorry, 3 over
3
divided by
divided by
12.
12.
Yeah, 49. Say that no problem. I think you got the process. You will try 1.96 on that. 0.49.
So 3,430,000.
Then the border total
Yes. Millions. Millions. 20 million.
correct. That is the answer.
More is R side or good. Yes.
The
First one 29.4.
30 is into 9.8 2.94.
2.94.
2.94 plus 0.49.
2.94
plus
plus
49. 0.49, yes.
4.49.
Please put order 0.49. 3.4.
3.4. Million. Okay.
Right. So this concludes this chapter. So we will stop for the day.